Let me be blunt. If you're over 50 and still chasing high returns like you're 25, you're not being ambitious, you're being careless. I've watched people spend 30 or 40 years building savings, then destroy it in the final stretch because they couldn't let go of the need to make more. At this stage of life, one bad mistake doesn't set you back a little. It changes everything, and most people don't realize that until it's too late. Here's what I see over and over again. People near retirement checking their portfolio every day, panicking when markets fall, celebrating when they spike, and secretly hoping for one more big win. They tell themselves, I just need a few good years. What they don't say out loud is what they're really afraid of: running out of money, becoming dependent, or feeling like all their effort was wasted. If that makes you uncomfortable, good, because that anxiety is usually a sign your plan isn't built for reality. I've spent more than 5 decades studying markets, cycles, and human behavior. I've lived through booms that felt permanent and crashes that felt like the end of the world. And here's the promise I'll make you today. By the end of this video, you'll understand why chasing returns late in life is one of the most dangerous financial habits and what to replace it with, so you can protect your future without losing sleep. Lesson 1, I stopped confusing growth with survival. When I was younger, growth was everything. It made sense. Time was on my side. Losses could be recovered. But later in life, the game changes. Survival becomes more important than winning. I've seen people lose 40% of their portfolio at the worst possible moment. They didn't just lose money, they lost options, confidence, and peace of mind. Practical takeaway: if a loss would force you to delay retirement, change your lifestyle, or rely on others, you're taking too much risk, period. I learned that big losses hurt more than big gains helped. This is something most people underestimate. Losing 30% doesn't just require a 30% gain to recover. It requires much more. And emotionally, losses hit harder, especially when time is limited. I watch smart, disciplined people abandon good plans because a big drawdown scared them at exactly the wrong time. Practical takeaway: design your portfolio so you can emotionally survive bad years without making stupid decisions. I stopped betting on a single future. Most people near retirement are making one silent bet: things will probably work out. That's not a plan, that's hope. I learned to always ask, what if I'm wrong? What if inflation stays high? What if markets stagnate? What if something unexpected happens? Practical takeaway: diversify not just across assets, but across outcomes. If your plan only works in a good scenario, it's fragile. I realized peace of mind is part of real wealth. There's a kind of wealth no chart can show you. It's the ability to sleep at night, to stop obsessively checking prices, to enjoy the years you work so hard for. I've met people with impressive portfolios who were miserable because every market move controlled their mood. Practical takeaway: if your strategy makes you anxious, it's costing you more than you think. Let's clear up a few dangerous myths. I need high returns to catch up. No, you need a plan that doesn't blow up. Chasing returns late in life usually creates the exact outcome you fear. Playing it safe means staying in cash. That's wrong. Inflation quietly eats cash. Safety without strategy is just slow loss. I'll know when to get out. You won't. Fear and greed destroy timing. Systems work, gut feelings don't. Here's a framework I want you to remember. It's simple, but it works. Protect, balance, prepare, endure. Protect, limit losses before you chase gains. Spread risk so no single event ruins you. Prepare. Plan for bad scenarios, not just good ones. Endure. Build something you can stick with when things get uncomfortable. If you can endure, you can survive. And if you survive, you can win over time. Let me leave you with this. At this stage of life, The goal isn't to impress anyone. It's not to beat the market. It's to make sure your money supports your life, not controls it. I've seen what happens when people learn this too late. You don't have to be one of them. If you want more hard lessons without the sugarcoating, subscribe and don't miss the next one.